Good morning. It's a little bit dark out still. It's early in the morning. I'm getting ready to head out to a lacrosse tournament for my son. And I wanted to take a minute and talk about mortgage rates. I had a customer yesterday. Their scenario is they want a 15-year fixed rate mortgage and they wanted to pull cash out of an investment property. So I put together a scenario and they said as much cash as they could get out of the property at a low rate. So we came in at about 3.5% with $90,000 coming out of the investment home. And they told me there was another mortgage company. What happened there? There was another mortgage company that was offering them $75,000 scenario with $75,000 cash out, but their rate was lower. And they wanted to understand what was happening there and how was that possible. So they kind of were inclined to go with the lower rate, even though it had less cash out. So very simple, guys. You got to understand this. There is no such thing as a mortgage interest rate for a loan. Okay. It's not like we open up a computer or a book or something and it says, hey, 30-year is at 6%, 15-year is at 5%, and so on. The rate is plus or minus about 1% or so in either direction when we look at our rate sheets. And what I mean by that is there's going to be a par rate. Par rate means it doesn't cost anything, it doesn't pay anything. There's no yield spread or discount premiums. So what does that mean? If I've got 6%, for example, and I offer the client 5.75, that's going to cost money. So 6% was at zero, doesn't cost money, doesn't pay money. 5.75, there's going to be money coming out of the loan proceeds to buy that rate down. You've heard of discount points. That's exactly what a discount point is. It's just simply the mortgage rate has a sliding scale. Now, on the other end, if the rate goes higher, it pays what's called yield spread premium. And that yield spread can be used to pay some of the closing costs and things like that up to the allowable limits based on the loan program. So in this scenario, with this particular client, I was able to take a little bit of discount points, roll them into the cost of the loan, and offer them a lower rate than my competitor while still giving them more cash out than my competitor was giving them. So understand that when you get quoted a rate, there's a little bit behind that rate. It's not just, hey, you're at 6%. So always ask, am I paying for that? Are there points involved? How much do those points cost? Because essentially those points are prepaid interest used to buy down the rate. And it may make a lot of sense to do that, but you at least need to understand. And when you compete with a client when you compare a loan based on the rate, two loans at 6% may not be the same, or a loan at 6% and a loan at 5.875. That loan at 5.875 probably has some cost in there that if you averaged that out over the amount of time you plan on keeping the loan, they may balance out. So, and as always, please feel free to give me a call, 407-209-9335 or 407-732-0110. Look us up, moneystreamfinancial.com, www.moneystreamfinancial.com. You can send me a Facebook instant message as well. You can text me, you can call me, whatever is convenient for you. We are at your service. Have a great day, and hopefully the sun's going to come out soon, and hopefully the kids will come out of the house soon, and I'm going to be able to head over to that tournament. Take care.